My buyer just lost $20,000. He bought a townhouse in Nashville in an area that's crashing, and not 3 months later, someone bought the same floor plan for $20,000 less, setting a new low comp in the neighborhood. Did he catch a falling knife? I'm going to give you the full breakdown, and then you can decide whether or not this was financial insanity or a pretty savvy investment. Now, it's no secret that townhouses and condos they're a disaster right now. Even in Nashville, even as prices show up as relatively flat, if you're using the median, if you're looking at Zillow's measure, you might find that they've dropped moderately, but none of this is satisfying really to anybody. It's not satisfying to the sellers. It's not satisfying to buyers. And here's where it gets interesting. My buyer bought a townhouse. Believe it or not, the townhouse that he bought, the same floor plan, $155,000 less than what they were going for in 2022, in the summer of 22. Same floor plans, same exact neighborhood, same style. That's a 25% crash in just over 2 to 3 years. So why would someone buy into a free fall? My buyer did a couple of things that I think are really smart. Okay, one, he assumed a 3% mortgage. He knew that this was a highly risky property. The conversation we had was, could this continue falling? The answer was absolutely yes, but there was a threshold he met. One, he can rent out the other 2 bedrooms and completely cover his mortgage payment. So between living rent-free and paying down his mortgage, he's saving $2,000 a month. That's $24,000 a year. He did have to put down a hefty down payment, $191,000, but he actually sold Bitcoin for the down payment. Bitcoin dropped 30% after that. Of course, there's a tax liability on the gain, so it's not all free money there, but the timing worked out perfect for him. So $191,000 down, he's saving $24,000 a year. Let's subtract a couple $100 a month for maintenance, call it $22,000 a year. That's roughly a 12% return on the cash he used. Now you tell me, if you disagree with that, what math am I missing? And for context, my buyer is not the only one buying townhouses in free-falling markets.
Folks, the housing market is crashing. I just bought the townhouse I'm standing in right now for a 35% discount to what it sold for in 2023. This is a 2-bed, 2-bath townhouse, walking distance to a lot of amenities. I got it for $160,000 off.
Nick Gurley from Reventure is finding areas that are falling in price, that are expected to continue falling in price. He just bought a townhouse himself. So is there a method to this madness? Let me show you exactly what I'm talking about. Okay, so I'm in NashvilleRealEstateData.com. I actually added every single neighborhood in the 9 counties in Middle Tennessee. You can now get access to every single neighborhood, every single area. I'm actually very proud of this. I've spent years working on this. This is the best real estate site in America, in my opinion. But let's go to Charlotte Park. This is a neighborhood on the west side of Nashville where he bought this townhouse. We're going to zoom in to Sterling Street here, and you can see it. Sterling has been tanking in value. If we switch to sales price here, okay, what do you see? There was actually an off-market sale. Look at that, 550 off-market, November of 24. Okay, let's filter this down. We know it's attached. We know it's on the small side. Here we go. He bought 6002 Sterling in December of 25 at a new low of 485. You know, to give you an idea where these were going, 6010 Sterling Street, 1,837 square feet, sold in May of 22. Essentially, the peak of the market for $625,000. So $625 for an 1,800 square foot townhouse at the peak. 25% crash, could go down another 20%. Well, here's the part that I think trips a lot of people up. This crash is being masked. When you look at all the transactions happening in Charlotte Park, there's nothing that indicates parts of the neighborhood have crashed 25%. I think a lot of people are having a hard time with this. There is a massive crash happening. I agree. It's just not every house, and it's not every property type. There's not distressed sellers everywhere. It's very different. When we look at the broader market here in Greater Nashville, you know, what we see is active listings are now up 13.3%. Now, Davidson's been a lot tighter, but even Davidson's starting to break out on active listings. That's something to keep in mind. Contract volume only up 2.7% now. Maybe we're starting to see the headwinds of those higher rates and just the fear of the real estate market tightening up. There's been a lot of negative news, but it's still higher than where it was last year. Price cuts as a percentage of active listings basically flat to the previous year. Just keep in mind, if your inventory is growing and price cuts as a percentage of those, if the inventory is flat, that's a lot more price cuts. So it's still masking, I think, a lot of softness. Certainly a metric we watch, but one that I believe if it's flat, it's still on the bearish side because of just how many more price cuts there are and how many more relistings that cut their price. Now, when we do look at contract price and median price, there's always usually a gap. Now, contract price is going to tell you where it's going to be in about 30 days. And really, median price should land where contract price is minus what the average concession is. So it's usually $5,000 or $10,000 below contract price is where the median sales price lands. Basically, prices are flat to down right now. They're down about 1%. It's about where they'll land in March. In April, very flat again. We are seeing a larger gap right now to what's under contract, which means that if contract price is flat to last year, the median price is probably going to be lower than last year. Something to keep in mind. Sellers are giving a little bit more than they were last year. They're a little bit more nervous, at least right now. Remember, median sales price is what buyers are paying. What Zillow measures is what sellers are getting. These are two different measures. And so Zillow has been a little bit more negative. Sellers have been giving up a little bit more, even as buyers have been paying the same. But now it looks like buyers are basically just flat. They're just paying the same to slightly less as they were last year. I think that's a lot of interest rate sensitive buyers that were moving into the market, especially as rates came up. I think that's going to start tapering over the next 4 to 8 weeks unless something changes with interest rates. So is my buyer having buyer's remorse because property value dropped almost immediately after he purchased his? No, he knew this. He was in this for the long haul. He kind of lucked out on his Bitcoin sale. And the truth is, with the 3% mortgage and living rent-free, essentially, he's perfectly happy. If values drop in the area, he'll be able to appeal his property tax value and actually reduce his monthly cost on the home. I don't think it phases him one bit. That being said, we live in a time where there are micro crashes happening everywhere. There are property values getting revalued, 20, 30% values changing. And yet, median home price, Zillow, a lot of these aggregate metrics just simply aren't capturing it. Because of that, it's never been more important to use data to understand your risk and to look at properties in unique ways. What's the unique value of this property that the market is potentially missing? Where sellers are a little bit confused, where they're a little bit discombobulated with the length of time it takes to sell, there's a lot more opportunity for data-driven buyer and sellers in this market than there has been in the past. And that's why I created the Neighborhood Tracker. It's finally at a place where I'm very proud of it. And it's at a time where I think it's very useful. And with that, I hope you all have a great rest of the day. I look forward to seeing you next Saturday. Thanks a lot.